Hello, financial fans. The market continues to trend downwards, and I would guess it probably will trend lower for the next year or more before it decides to turn around and go back up where it belongs. And as of right now, my portfolio for the year, my entire portfolio of 70 some stocks for the year is down 14.6%, and continues to go down, and the S&P 500 is down 19.8%, so I continue to beat the S&P 500 as we go into the second half of 2022. And I see many stocks out there that have interesting numbers, and they look like buys to me for people who are long-term holders of stocks and are willing to hang on until you have a profit before you sell and you don't panic. There's some stocks which have good numbers. Now that doesn't mean they're going to all turn around and suddenly become big winners. Just means something to look at, something to consider for those of you who are starting to look at the market and think about what could be done if you get in at the right time, get out at the right time. We're going to look at 4 stocks right now, and at least one of the stocks I already own, 2 of the stocks I think I already own, and both are down. I'm not sure about Verizon, but I think Verizon is down, and I know Sbsw is down about 50% from what I paid for it, but it still looks like something that I would say is a stock that has good numbers. We're going to take a look at the 4 different stocks, beginning with Caterpillar. Caterpillar, CAT. CAT is a symbol for Caterpillar. They used to have a stock in the American Stock Exchange that had the symbol DOG, and that was Greyhound buses. But this is CAT, Caterpillar. If there is an infrastructure rebuilding, as was promised by many people long ago, Caterpillar would be one of the benefiting stocks in any rebuilding of bridges and roads and so on, since they make the big equipment that is needed for that type of work. And CAT, as of Friday, closed at $173.38, $173.38 per share, and it was up 2% for the day. And this is the 17th, Sunday the 17th of July of 2022. Look at the column on the left, 2/3 of the way down, 52-week range. $167 was the low, so we're pretty near to the low, and $237.90 was the high for the past 52 weeks, so it's got a lot of headroom. It could be going up, and it's got a long way to go up before it becomes a stock to sell and get out of. The average volume for Caterpillar, 3,250,000 shares trade every day, and the stock is considered by the experts to be near fair value. Third item down, middle column, PE ratio, 14.55, which is not a high PE ratio. It's higher than I usually recommend, but for Caterpillar, this is a big stock, and it is the #1 company in its field, and you will see the Caterpillar equipment out working anywhere that there's major work, whether it's bridges or roads or building a city on the side of a cliff somewhere. Caterpillar would be called in to do it. The forward dividend yield, almost 3%, 2.77%, which is not enough to keep up with inflation, but it's still better than not receiving a check. And the 1-year target estimate for Caterpillar, from its current $173.38, it's expected in the next 52 weeks to go to maybe $227.64. We shall see. Next stock we'll look at, Bank of America, BAC is the symbol, and banking stocks should do well as interest rates are going up. $32.25 was the close on Friday, up 7%. That's a big move for any stock on any day. The 52-week range for Bank of America, $29.67 was the low, so it's near to the low right now. And the 52-week range high number was $50.11 a share. The average volume, almost 50 million shares trade every day, so Bank of America is a very, very popular stock. And it's considered to be near fair value. The PE ratio, under 10, the way I like it, 9.19. You're getting a good company for 9.19 PE ratio. The forward dividend yield, 2.5%, a little over 2.5%, 2.6%. And the 1-year target, $42.35, which would be a big move up from its current $32.25. Next we look at Verizon. I do own Verizon. VZ is the symbol, and $51.02. $51.02 is the closing price on Friday. It was up 1%. And we look at the 52-week range. $45.55 was the low, and $56.85 was the high, so it's comfortably positioned there in the middle. Average volume, 21,600,000 shares trade every day, and this stock is considered to be near fair value. Third item down, middle column, PE ratio 9.93, again under 10, so that's nice for dividend and yield. 5% for Verizon VZ. 5% is a very, very good rate of dividend payment. 1-year target, $57.85, which would be a nice move upwards from where it is right now at $51.02. And the last stock we'll look at today is Sabanya, Stillwater Limited, Sbsw. I do own this, and as I have mentioned before, this stock in my portfolio, just this stock, is down 50% from where I bought it, and it was down on Friday. It's selling currently $8.85 a share. 52-week range, the low was $8.67, so it's very near to the low, and the high was $20.64. Average volume, about 4 million shares trade every day, and this stock is considered to be undervalued, and I agree. The PE ratio, 3.37. You never see that. 3.37, that is very low. Low is good for PE ratio. Forward dividend and yield, 14.7%. And that $1.30 that it takes to reach the 14% is easily covered by the earnings per share of $2.63 per share earnings. That's these are crazy numbers. And remember, I said that in my portfolio it's down 50%, but I might be getting some more. 1-year target estimate, $16 and a penny. And if it reaches there, that will be a very big move upward. And I thank you very much for watching.